Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Thursday, the 6th of July. Now, the dollar gains after Fed minutes reinforced rate hike expectations. Now, these minutes are from the previous meeting. Now, we've had Jerome Powell in Europe talking about interest rate hikes all last week. So, to me, it was already factored in. But, surprise, surprise, the markets have sort of moved a little bit on the back of this. And it's a little, if anything, I'm a little bit surprised because it's already factored in. So I don't know if that's just a fresh reinforcement, which has got the market sort of thinking, this is a big deal. But we are starting to see a little bit of a tweak. Dollar index is trying to break topside. Euro, just a little bit of a clean out of a few stops here. And gold, well, it's sort of whipping around the place. Oil's trying to track higher. Equity markets, this is where you can see if the market was really serious about what the Fed was talking about. Now, the Dow Jones Mini is down a bit. The S&P, well, sideways. If anything, NASDAQ's going back up, right? Now, there is, I did hear a few reports around the whole AI thing is starting to lose a bit of focus, as in the number of people looking it up and reading it and all this sort of stuff is diminishing, which is generally expected. I'd say that whole AI story has really boosted Bitcoin as well. And probably with that news, it's sort of just broken down through a support trend line, but really it hasn't really gone anywhere. Now, just having a look at the currencies, right? And this is where you can sort of really have a look and see the impact of the FOMC minutes. As I was saying, we had a couple of tries here in the top side on Euro, and it sort of just failed pretty weakly. Okay, it wasn't a big challenge. And then the minutes came out, was enough to give the Euro a little bit downside momentum. And Sterling, well, it drifted off a touch, but really it's still trading sideways. If anything, the Aussie was one that did drift a little bit further. And the Kiwi, well, a little bit sideways, just like Sterling. Dollar CAD, top side, but pretty volatile sort of price action. And if Euro continues lower, this is what I'm sort of looking at here. Like dollar Swiss hasn't broken high. That's why I think the move down in Euro is either short term or we are going to see a break up here in dollar Swiss. Dollar yen just drifting sideways as the whole yen watch thing continues. I tell you what, the BOJ love this, right? They've stopped it going up, right? Which is one of the first objectives. Now, if nothing happens, well, they're sort of happy, right? It's not going up any further. So, but if it does continue higher from here, that's when we might see some sort of intervention. The dollar index, I wouldn't say it's exactly screaming topside, but it is tweaking through that short-term support trend line. So what have we got? On the cards, we do have a slightly stronger dollar sort of short-term outlook at the moment. Now, you want to connect this up with the key data. And you know what? Today, Thursday, we don't have that much information. Like the market has been moving around on the weekly initial jobless claims. So that's something to keep a little bit of an eye on. The balance of trade figures here in Australia came out sort of better than expected. If anything, the Aussie's gone up 10 pips. Now, why I'm mentioning that is it means there's peripheral data here that is coming into play. So maybe keep an eye on the Canadian balance of trade data. If there's significant variance there, then you might see a move in the CAD. Now, it's not huge. Don't get me wrong. It's not like employment or CPI, but it is a bit of a key part to the whole equation. So for today's trading, okay, the Asia session pretty quiet. You got European retail sales. Then you've got these a couple of different independent numbers, right? The ADP employment change, the initial jobless claims. Now these aren't the non-farm payrolls. Don't get confused with that. But we have seen probably more so the initial jobless claims numbers impacting. And, maybe it gives us a bit of a precursor to Friday's numbers, but we'll have to wait for that. The CAD IB PMI, good historical number to be looking at. And then this jolts job openings. I've seen weirder things that can sort of come into play. And you've got the US ISM services data there as well. Really not much as we lead into the non-farm payrolls and the Canadian employment numbers there on Friday. This is the main action. By the time it gets sort of halfway through Thursday, the market will be focusing on these key events. Don't forget, late Friday, you got Christine Lagarde speaking there as well. I'll probably cover these tomorrow. Non-farm payrolls, the more important. It's a bit of a shame, as I say, every second month when the Canadian employment numbers come out at the exact same time as the US employment numbers. Okay, it adds an extra layer of volatility that we don't really need. They could be on different days. It'd be two major events. Instead, we get one big calamity. So, but this is going to go a long way, right? This, since the Fed minutes and also the, what Jerome Powell was talking about last week, this is the first real big number, CPI and employment numbers, the two big numbers they're looking at, inflation more so, that, if we see really solid numbers here, then and lower employment, well, it gives the Fed a lot of room to raise rates, which is fully expected, right? As I said, I can't see why a number of the currencies sort of went with the dollar strength, because it's old news in my regards. The fresh news will be the US employment numbers Friday, but we've got a good 48 hours to wait for that. Anyway, come back to the what's in front of us. Have a look at the German factory orders. Try and piece things together. Like Euro's drifting lower, so weaker numbers here would fit into the equation. Stronger ones, we might see a little bounce in the euro. Anyway, that guys, not much to do today ahead of the non-farm payrolls Friday. So just keep your capital intact, and we'll look to cover the employment numbers tomorrow. All right, guys, have a good one. Cheerio.